Good morning, ladies and gentlemen. Let me start our quarterly session. First of all, before I hand on to Mr. Lízal, I'd like to ask you to please keep your cell phones and tablets on silent mode. As you have probably noticed and heard, we are recording this session and video streaming to our website, and the video recording will be available on our website after the meeting. Thank you very much for cooperation, and now let me give the floor to Mr. Lízal.
So good morning, everybody. I would like to welcome you at the Czech National Bank. First, let me point out that apart myself, there is the new member of the board, Jiří Rusnok. I don't think that I need to basically introduce the former Prime Minister of the Czech Republic, so I will just say welcome. And first of all, I would like to sort of point out that there is going to be a change in a tradition. And this is, as you know, the meetings with the analysts were traditionally organized 1 week after the meeting of the Monetary Committee. However, we have decided that this is going to be changed. We will meet 1 day after the meeting, so it shows that today is the exception from the rule that was introduced. So basically, our idea was that we would like to meet you just the next day after the meeting. So typically, it's going to be a Friday, but due to the national holidays, we have opted for Monday at the first time. So that's the exception from the rule from the very beginning. So, but the next time it should be standard. So it's going to be the Friday after the Monetary Committee meeting. This change should probably allow all the participants to have the relevant context of the bank board decision and the meeting, and get the flavor of the macroeconomic forecast and what was actually behind the decision. So we will basically follow the examples of some other central banks. So because we would also like to have the broader audience, so the meeting is going to be recorded and webcast, so basically everybody can see and participate, at least passively, in the discussion. So the record will be on our website as soon as possible, so there is some technological delay, but that's all. And that would be just all for the introduction. And let me allow right now to pass the word to Tomáš Holub, the Chief of the Monetary Division.
Good morning, ladies and gentlemen. This is not just unusual timing of the meeting, but it's also an unusual room. This is actually a room in which my department presents the new forecasts and analysis to the bank board. So the first part of the board meeting takes place exactly in this room. And the reason why we are here is not because we wanted to show you the room where the board meets, but because there is a parallel meeting in the conference center. It's the Research Open Day of the Czech National Bank. Unfortunately, it's now a very sad time for research at the Czech National Bank because our long-serving head of research, Kateřina Šmídková, has passed away, which was a big shock for us. And she was not just an excellent researcher, but also a person that was very actively involved in all monetary policy debates as a long-serving advisor to the board. And I know that many of you knew Kateřina, and I thank to all of you who have already expressed their sympathy for this loss with the Czech National Bank. We are not going to hold any formal minute of silence, but because Kateřina didn't want any formal big ceremonies. But again, I just wanted to mention her, and we will miss her a lot. Today, the presentation will be given by a colleague of mine, Tibor Hledík, who is heading the macroeconomic forecasting division. So please, Tibor, the floor is yours.
Thank you, Tomáš. Good morning to everyone. Dear colleagues, it's my pleasure to present the Czech National Bank new forecast. Let me start with the assumption, the outline of the forecast. In the first part, I will highlight the main assumptions of the forecast. Then I will turn to a more detailed discussion of the new macroeconomic outlook. And finally, I will compare our new forecast with the one what we produced in January. So let me turn to the assumptions of the forecast, and first I will talk a little bit about the external outlook. The external outlook is based on the April consensus forecast, and it assumes that the recovery of the GDP growth in the effective euro area will continue. The forecast assumes that GDP will grow by 1.6% this year and will accelerate to 2% in 2015. As far as price development is concerned, PPI inflation or the producer prices are currently falling, but the forecast assumes a return to a subdued growth. In terms of CPI inflation, you know that the consumer price inflation is positive in the Eurozone, but the overall price pressures are very subdued, and of course the prices are well below the definition of price stability as defined by the European Central Bank. If you have a look on the development of interest rates, you can see that the subdued price pressures and also the expectations that prices will not grow excessively on the forecast horizon are showing up in a very low level of interest rates. And you can also see that the market participants are revised their expected interest rate level downward compared with our previous assumption. In terms of the exchange rate of the euro against the US dollar, the consensus forecast still assumes that there will be depreciation of the euro against the American dollar on the forecast horizon. Another broad area is fiscal policy, where we already received the spring government deficit and debt notification numbers, and based on this new information, the public deficit has declined to 1.5% of GDP in 2013, and it was due to the unwinding of the effect of the financial settlement with churches, as well as to the fiscal consolidation measures, including significant drop in government investment, and also there is a positive impact of the rise in the government dividend income. The public deficit will stay very close to the 1.5% of GDP this year. And again, there will be some conflicting effects there. On the one hand, still there will be some effect of the fiscal consolidation measures that the government started in 2012. At the same time, the better economic growth will generate higher tax revenues, and also the government will be more expansionary in terms of investment, and also in 2015 there will be a positive effect on consumption. The fiscal impulse has been revised for the last year. Actually, now, based on the new information, we think that we estimate the fiscal impulse at -1 percentage point in 2013, And we also revised the neutral stance for 2014 to 0.2 percentage points, and even further for 2015, where we believe investment activity will, and also through some tax changes, the government will have a positive impact in 2015. The real government consumption will continue growing modestly. Let me now just summarize the monetary policy area assumptions. The forecast assumes that market interest rates will be flat at their current very low level until the start of the next year. By the very low current level, I mean the sum of the technically zero 2-week repo rate and the money market premium. The near-term forecast for the exchange rate for the second quarter is set at 27.3 Czech crowns for the euro, and afterwards the exchange rate is assumed at 27 Czech crowns for the euro until the beginning of 2015. I would just remind that the 27 Czech crowns for the euro exchange rate is the level of the Czech National Bank's exchange rate commitment. The level of the exchange rate continues to be appropriate as it delivers the necessary monetary easing, and at the forecast horizon, the return to conventional monetary policy will not imply appreciation of the exchange rate to the level recorded before the Czech National Bank started intervening. Let me turn now to the new macroeconomic forecast, and first I will start with the summary of the forecast. We expect that headline inflation will increase this year from its currently low but positive levels, and headline inflation will get just above the target at the start of the next year. In the second half of 2015, it will return to the 2% target, where we forecast that it will stabilize more or less at that level. Monetary policy relevant inflation will turn towards the target at the end of this year and will stay very close to the target next year. The weaker corona will continue to affect inflation through import prices, and we estimate that the weaker corona played just an important role to prevent inflation to get into the negative territory at the beginning of this year. However, the positive effect will gradually fade away from the second quarter of this year onward, and then starting from the second half of this year, the consumer price inflation will be strongly affected by the continuing growth of the domestic economy and also by a recovery in wages. Following the decline in the previous 2 years, the Czech economy will increase by 2.6% this year, and the main factors behind this relatively swift growth are higher external demand, the positive effect of monetary policy easing delivered through the weakening of the Czech crown, and also a slightly positive fiscal impulse in 2014. The economic activity will be even more boosted by fiscal policy in 2015, leading to 3.3% growth of GDP. As usual, the recovery of the domestic economy is showing up in the labor market with some delay. So practically the employment expressed in full-time equivalent will switch to positive growth in the third quarter of 2014 and will reach 1.3% year-on-year growth at the end of 2015. The wage growth in our forecast assumption will practically recover from the significant drop that we witnessed in the first quarter of 2013 and will accelerate further on the forecast horizon, reflecting the ongoing economic activity and recovery. The forecast assumes market interest rates to be flat at their current very low level until the start of next year, followed by a gradual rise in market rates into 2015 by about 0.6 percentage point. And here you can see just a graphical representation of what I was just describing. As expected, inflation dropped to a very low level that was in line with the Czech National Bank's forecast, if I'm just not taking the small miss we had for the first quarter. And it will be gradually moving towards the target in the rest of the year. At the start of the next year, headline inflation will slightly exceed the target, to which it will return to in the second half of the year. When we have a look or examine the structure of price increases, then one can see that the inflation was lower than the forecast by 0.2 percentage point. And this miss, we explained, or it is done mainly with lower growth of administrative prices. So practically the discussion whether the exchange rate pass-through is as we estimated or not, at the moment we think that more or less in terms of exchange rate pass-through, we are, the numbers are not questioning our previous assumptions. And even today, we received a new number. The year-on-year inflation was 0.1%, which was just very, very mildly below our target. And when we looked into the structure, food prices were growing a little bit less than we expected, and core inflation was slightly higher. But again, there is no sign that the exchange rate pass-through, as we estimated, would be different, at least not based on this data. There was also, if we have a look on the right-hand side graph, there was also a slight downward surprise in core inflation, but also we, in the first 3 months, we've seen a slightly higher food price inflation, and this was due mainly to non-tradable prices, which in our assessment still reflects the anti-inflationary impact of the domestic economy. Monetary policy relevant inflation will be close to the inflation target on the whole monetary policy horizon, and it will be slightly lower than the headline inflation due to the further harmonization increase in excise duty on cigarettes in 2014. Net inflation reached more or less 1% in the first quarter of 2014. Actually, there was some transmission of the higher food prices, as I mentioned there, and also the anti-inflationary impact of core inflation was gradually diminishing due to the weaker exchange rate. You can see that on the forecast horizon, we assume that net inflation will continue to accelerate until the mid-2015, mainly as a result of higher import prices and improving economic activity. In the first quarter of 2014, there was a significant drop in the growth in administrative prices, and it was mainly due to different factors, but electricity prices were lowered quite significantly, and also the prices of healthcare were lower. You can see that on the forecast horizon, the fall of administrative prices will gradually diminish during this year due to the weakening anti-inflationary effect of the year-on-year decrease of gas prices. Just examining core inflation, from the graph you can see that core inflation was still negative in the first quarter of 2014, and as I mentioned, despite the fact that the exchange rate delivered some positive effect there, still we just seeing that the domestic economy is still quite anti-inflationary, and from this level it is expected to switch to positive value in the next quarter, and then the increase, then it will increase further until mid-2015. Initially, adjusted inflation is driven by growing import prices. Later on, there will be a switch, and the domestic economy will generate more and more cost pressures, and these cost pressures will show up in inflation. The food price inflation is expected to fluctuate between 3 and 4%. And besides the volatility, we assume that agricultural commodities prices on world markets will accelerate on the forecast horizon, and that will be the main driver force behind higher food prices, and also the exchange rate still the relatively weak level will happen during 2014 through import prices of food. Analyzing the cost part of the price development, currently import prices are keeping consumer price inflation in a positive territory, as I mentioned previously, and you can see that we are identifying that the domestic economy is still anti-inflationary. In the coming quarters, import prices will be gradually decreasing, while the accelerating wage growth and economic recovery will start to play the main role in stabilizing inflation close to target. Also, you can see the impact of accelerating wage growth on the lower graph that will reflect, of course, higher productivity growth on the forecast horizon. GDP growth was surprisingly high in the fourth quarter of the last year. It reached 1.2% year on year, and the main driving force behind this impressive growth, which was even higher in a quarter-on-quarter terms, was given by fixed investment. Also, household consumption and net exports contributed to the positive growth. In the opposite direction, the change in inventories acted, and despite the fact that in the fourth quarter there was a quite significant front-loading of cigarettes due to the expected increase in taxes at the beginning of this year. You can see that the GDP forecast is revised upward to 2.6% in 2014 and 3.3% in 2015. This year, the economic recovery will be supported by growing foreign demand, the relaxed monetary conditions, and also partially, as I mentioned previously, by fiscal policy. The acceleration of economic growth in 2015 will be boosted by a significant fiscal impulse, contributing to both consumption and investment. Having a closer look to the expenditure side items of aggregate demand, household consumption accelerated further on the fourth quarter, and you can see that we assume a slightly slower dynamics for the first quarter, because we assume a slight correction of the relatively high consumption growth from the fourth quarter, which was partially driven by increased inflation expectation after the Czech National Bank weakened the crown. On the forecast horizon, you can see a steady growth of household consumption given by the improving economic activity and also wage growth. Investment growth will be influenced by front-loading of cigarettes and strong revival of public investment, mainly in 2015. The exports and practically the growing exports will reflect growing foreign demand and also the weak exchange rate this year. Imports practically follow more or less domestic demand, so higher consumption and investment this year will show up in higher imports. We try, as usual, quantify somehow the cyclical position of the Czech economy through various indicators of the output gap, and the output gap remained negative in the last quarter of 2013, despite the significantly higher pickup of GDP than we originally expected. You also can see that the output gap is more closed compared with the previous quarter. All methods, however, imply that the output gap will close by the end of 2015. The labor market, as I mentioned, is reflecting the economic cycle with a considerable delay. The year-on-year growth of employment will continue from the second half of this year and picking up more strongly in the next year. The average hours of work per employee will also start to increasing. It is on the graph, you can see it in red bars. And the employment expressed in full-time equivalent will start growing from the end of 2014, which combines both effects. The nominal wage growth, as I mentioned, surprised us significantly in the fourth quarter. The year-on-year drop was 2.4%, and even if we take out the tax optimization effect, still the wage growth was slightly negative in the fourth quarter. We assume that wages will grow positively already in the first quarter, and the short-term indicators, the wage growth in industry and construction, is showing that this forecast is realistic. At the same time, we assume that wages will further accelerate as the domestic economy will be improving. In 2015, there will be additional upward effect on wages given the changes in the health insurance. The share of unemployed persons will be declining on the forecast horizon, and this is really a kind of cyclical story. We were surprised in the initial conditions, slightly downwards, and also the revision, as I will show later, is linked to the economic recovery. The forecast assumes that market interest rates will be flat at their current very low level until the start of next year, and followed by a gradual rise in market rates into 2015 by about 0.6 percentage point. And let me turn to the final part of my presentation, that is the comparison with the previous forecast. First, I would just summarize the main findings. Both headline and monetary relevant inflation are lower than in the previous forecast, mainly due to lower outlook of administrative prices and lower prediction for net inflation. The lower net inflation will be accompanied by a deeper fall of administrative prices this year and by their less significant increase in 2015. The lower net inflation outlook reflects the downward revision of core inflation, partly offset by higher food price growth. The GDP growth has been revised upwards for both 2014 and 15. The main factor behind the revision of growth for next year is higher fiscal stimulus. Nominal wage growth will be somewhat lower this year, and as I mentioned, it's partially a reflection of the negative surprise we experienced in the fourth quarter, and the share of unemployed persons is revised downward on the whole forecast horizon, given the better economic outlook. After this continuation of the use of exchange rate as a monetary policy instrument, the interest rate path in the prediction is lower, mainly reflecting a lower outlook for foreign interest rates and prices in 2015, as well as lower outlook for domestic administrative prices and net inflation. And this graph is just capturing exactly what I said. The inflation forecast has been lower for the whole forecast horizon, and you can see that the biggest revision is in the first quarter of 2015. Then the difference is just gradually diminishing. The main factor behind the revision of net inflation is the lower forecast of core inflation and also fuel prices, and this is partially offset by higher food price growth on the forecast horizon. Administrative prices experienced a deeper fall due to prices of health services and the lower price growth in heating and gas. And in 2015, we assume a downward revision of energy prices. The lower forecast of adjusted inflation, excluding fuels, this is our core measure of inflation, reflects a more gradual recovery of wage growth, and this is also paired with higher productivity growth, which is further pushing prices down. The revised food price outlook is, as I mentioned, the result of higher expected growth of agricultural commodity prices on world markets and also imported food prices. The expected GDP growth has been revised upward in both 2014 and 2015. The revision is more or less very close to half percentage point for both years. And the main reason is expected higher investment activity both in private and government sectors and also more expansionary fiscal policy. You can see that the forecast is relatively quite volatile, and it has to do with the front-loading of cigarettes this year, where we assume that the producers will create some stocks, and actually this is the main reason behind the increased volatility. The GDP growth overall is more than in the previous forecast, driven by household consumption and investment. In households, the biggest effect in compared with the previous forecast is the higher consumption at the initial conditions, and also the saving rate fell much more than we expected, and on the forecast horizon the saving rate will be, compared with the previous forecast, lower. Investment growth, besides the effect of front-loading of cigarettes, will be driven by higher investment activity, both in the private sector, which will reflect higher export demand, but also the government will invest more in the public sector. There are no big changes in exports and imports compared with the previous forecast. The outlook for wage growth has been revised downward due to the deep fall of year-on-year growth, as I mentioned, in the first quarter, and then there are no big changes for wage growth in the business sector for 2015. The share of unemployed persons will fall faster than in the old forecast, and the main driving force behind the lower share is just the better economic outlook compared with the previous forecast. The interest rate path consistent with the forecast is unchanged for 2014, and the interest rates for the next year are mainly reflecting a lower outlook for foreign interest rates and prices, as well as the lower outlook for domestic administrative prices and net inflation. And ladies and gentlemen, thank you for your attention, and I'm giving back the floor to Tomáš.
Yeah, thank you, Tibor. Thank you for the presentation. Now the turn is yours. Now the floor is yours. Ladies and gentlemen, please, you're now free to ask questions regarding the presentation as well as the decision from last week by the board. Ready to answer your questions are board members, Mr. Lízar and Mr. Rusnok. Could you please identify yourself also when asking a question? Thank you. And who is going to be the first? No questions.
Jan Bures, CSOB. I had a feeling from the comments by the central bank governor after the meeting that he is kind of a bit more skeptical about the economic outlook than the official forecast. I would like to ask about your feeling. Do you believe 100% the current economic forecast, or are you personally also maybe a bit more skeptical about the economic outlook for 2014 and especially for 2015, where the economic outlook is 3.3% GDP growth? Thank you.
Okay, so I will start with this question. Basically, we will not here express our sort of personal opinions, but let me summarize it in such a way that actually what we work with in the outlook is the current status of the laws. So should there be any changes, and of course there are likely to be some changes. The questions are whether the policy, fiscal policy, will be more expansionary or less expansionary. So this is one of the uncertainties that we have in the outlook, and this is on the domestic side. Of course, on the general outlook in a world, of course, many of the world outlooks has been continuously somehow revised downwards. So of course, those risks are there still and still remains. I would just also mention that when you compare the outlooks between the first and the third or the second inflation report, that actually a lot of the inflation outlooks and for the effective Eurozone have been revised downwards as well. So these are the risks that are there.
Okay, so I will try my comment to this. It seems to me, that's definitely my feeling, that for 2014, I feel the solidness of our forecast like relatively very high. So it seems to me quite robust. Of course, generally and logically, with the longer horizon, some uncertainty are growing, definitely. So 2015, as already Kolega Liesel said, there is the question of the fiscal policy, how it will look like in reality, because so far we have something in the legislation which probably will be changed, so that there will be significant impact of that. And of course, the external uncertainties are also growing, in my opinion, for the longer horizon. So my answer would be that for the short-term horizon, I would definitely back our forecast. For the longer, it's more difficult generally, I think.
Thank you. Mr. Sobíšek, next question.
Pavel Sobíšek, Unicredit Bank. How much discussion was there on the policy meeting about the change in the forecast in general, and what were the main sticking points? Thank you.
Maybe I will start. There was a lot of discussion, I would say, in the session with the section, with colleagues from monetary section, because I think, generally it's very, very difficult, according to my opinion, to feel very robust in years or times when we are observing so small changes in the main indicators, macroeconomic indicators. So I think it's not necessary to explain to you that measuring of some of the indicators is not an easy exercise. So we feel certain uncertainty, of course, in some forecast in this respect. However, at least it's my opinion. It seems to me that that certain kind of confident or I would say credibility to our to the model which colleagues are using and the experience they already had prevailed. What would be my description of the discussion? So, and the main stick points, I don't know, there was not specially one which would be very much commented towards the others, comparing with the others. Maybe the GDP 2015, it seems to some of the members quite optimistic. But as I already commented with my previous answer.
I would probably just to add that probably what you're asking about is somehow reflected also in the bank board decision, that basically one of the messages that is conveyed, that the probability of exit being somehow later in the next year has increased. This is something what probably shows the uncertainty that we might be keeping our commitments a little bit longer. But this is just about the probabilities. It's not about something that has been decided. Tomáš, probably.
Yeah, maybe. Well, there are, of course, two important elements in the change of the forecast compared to the previous one. One of these elements is related to future price developments, and it has its reflection in the statement of the bank board, which points to the lower outlook for inflation as one of the reasons behind the main reason, I would say, behind the increasing probability of a later exit from the current regime. And, well, I would probably clarify that this downward shift in the inflation outlook has two key elements. The first one is lower outlook for regulated prices, both this year, which reflects what we already observe, but also for 2015, when we now expect only a very mild growth of regulated prices on average. And the reason is that we observe a further decrease in electricity prices in the wholesale market, which we this time decided to incorporate into the forecast sooner than in the previous years, because last year we incorporated this decline in wholesale prices into the forecast only in November, and with the benefit of hindsight, it seems to us that it was probably too late. So this time we decided to be more preemptive and to incorporate the current market information already now in the forecast. And the second major reason for the downward revision of inflation, which relates to the lower outlook for market-determined prices, the so-called net inflation, is the extremely subdued wage growth, which we observed in the fourth quarter of 2013. You may remember that there was a lot of debate about the potential threat of deflation, and it subsequently leading to a decline in nominal wages when we decided to weaken Czech koruna. But at that time, we viewed this decline in wages as a hypothetical potential threat for the future. We didn't expect that we would already see it in the hard data for the fourth quarter of 2013. And as Tibor mentioned in the presentation, there was actually a year-on-year decline in wages in the private sector, even if we take out our estimates of the effect of tax optimization. And of course, given the persistence of nominal wages, this has carryover effects for our outlook of net inflation for the coming few quarters. So this was on the price development side. Mr. Rusnok already mentioned the real economic outlook, especially for 2015. Tibor in the presentation showed that actually for the moment, as regards the fiscal assumptions, we have a relatively major expansionary fiscal stimulus for 2015, and this expansionary fiscal stimulus has two components. One of them is the assumed recovery of public investment from very subdued level, which was observed in 2013, And here we basically take the assumption that the government will be able to utilize the EU funds effectively from the previous programming period, and that also the domestically financed public investment will start to pick up. And at the same time, we keep our usual no policy change assumption as regards those elements of fiscal policy that require a legislative change. And the currently valid but so far ineffective legislation would imply some tax cuts in terms of personal income taxation in 2015, which are also a part of this fiscal impulse. But of course, the current government has different fiscal plans than the previous one, but still they didn't have enough time to draft the new legislation to such a stage that would allow us to incorporate it in the forecast. So there is obviously some risk related to the tax legislation, which would imply a lower fiscal impulse. And of course, the strength of this fiscal impulse will also depend on the degree of success of the government in implementing the EU projects and the domestically financed public investment. So this is just to clarify where this relatively major fiscal impulse comes from, and it also affects the comparison of the GDP forecast with the previous one.
Thank you, Tomáš, for clarification. Ladies and gentlemen, the next question. Mr. Vejmilek.
Vejmilek, Komerční banka, good morning. How do you see potential impact of the Russia-Ukraine crisis on your forecast, and which channels do you see most relevant via foreign trade, commodities, financial markets, or any other? Thank you.
Okay, so, it's extremely uncertain, so we haven't even dared to sort of evaluate the effects, since I think that whatever can happen will be a surprise. So in this respect, the board has somehow discussed it, but we haven't evaluated the risks that are associated with that, just because it would be just pure speculation.
Okay. Any next question? You missed
Jaromír Šindel, Citibank. I would like to ask on assumptions and commitments for your exit strategy. I understand from previous comment of Czech National Bank, if I remember it correctly, that the exit strategy should start once the inflation is, let's say, approaching the inflation target from the upper bound on the inflation on the forecasted horizon. But the new forecast doesn't show any, let's say, inflation at the upper bound. It's very close to the inflation target. So it's one question where this assumption still holds. And the second question is about the FX commitment, because in the previous years, Czech National Banks never committed to the FX forecast or to the FX. I understand that currently we are at the FX intervention mode, but during the last months, I see that this commitment is even stronger and stronger. And if I look into the forecast horizon, I see, and we also mentioned the uncertainties regarding the ECB quantitative easing, potential quantitative easing. I see much stronger GDP growth in the Czech Republic and inflation at the target. So I'm just a little bit curious whether you see some risk of this quite stronger commitment, FX commitment, particularly for the end of 2014, beginning of 2015. Thank you.
Okay, I will probably start with a short explanation. Basically, the outlook that you have seen is based on the past decision. So basically, when the monetary department prepares the forecast, they have to somehow place the exit, and this is what they have done. So it's the first quarter of the beginning of the next year. Based on that, you basically see the current forecast of the inflation that basically goes to the target slightly above, and after that, after assuming there's going to be an exit as posed in the past, it goes to the inflation target. This is why sort of we have communicated that the probability of keeping the commitment a bit longer is increasing, and it's in line with our previous communication that basically we would rather keep the commitment longer than changing it. To sort of explain the dynamics is that basically when the forecasts are prepared, they are sort of taking what was decided and what's certain, and then it's on the bank board to somehow evaluate and somehow send a message, if I can say that, to the markets. And I think this is exactly what we are trying to show, that still it's possible that under certain conditions we might have the exit as was stated previously, but the probability that it's going to be kept longer has increased given the change in the outlook, both for the domestic, especially for the foreign growth. So your question basically is based on the assumption that what you see for the exit in the first quarter might not be always consistent with the previous message, but I think that it's clear that we wouldn't like to sort of exit and then re-enter. So basically from that, I think it's clear that what we are trying to do.
I basically can only confirm what Luboš said. So I think what is important is take into account that at this moment we have this assumption in the model. Of course, we are aware of the slightly changing probability that something will happen earlier, rather later. So that's something which the board is taking into account, and therefore the communication reflects that stance, I would say.
Thank you. Is there any next question? Okay.
Jiří Škop, Komerční banka. I have a question related to the effect of weaker crown. You said already that you evaluate the effect on inflation, and it was circa what you expected. My question is, do you also evaluate the effect on real economy, like especially on real exports? Because I see that you made a downward revision to the real exports, but made an upward revision to the Eurozone GDP growth.
Yeah, well, there is a small downward revision to the export growth, but I think it's a very small order of magnitude, basically reflecting the last observed numbers.
Exactly, I think
which remain in the year-on-year figure, but it's 0.5 percentage point roughly, so I wouldn't put too much weight on it. In general, I would say that so far we were surprised on the upside with the real economy, especially as regards the consumption growth and fixed investment. For consumption, we were expecting an increase in the first quarter of 2013, partly boosted by the shopping panic, so to say, of people in expectations of higher future prices. But then we assumed in the previous forecast relatively visible correction in the first quarter of this year. But so far what we can see from retail sales data is relatively solid performance, or also in the first 3 months of 2014. And this has led us to revise the consumption outlook for this year, which more than offsets the slightly lower export growth rate. But as regards the export growth rate, you can see that it almost touches it touches basically 10% in the forecast, which is a combined effect of foreign demand recovery, but on top of that, there is the effect of weaker koruna. Without that, the acceleration in exports would certainly be there, but a few percentage points smaller than what we have here. So I would basically say that yes, of course, with the caveat that the main impact of the economic recovery on the wage growth and on the inflationary, mild but persistent inflationary pressures from the domestic economy is still to come. And we expect it to become visible in the second half of this year. So this part of the story, which is very important also for the timing of future exit, it's still to be seen.
Okay, thank you, Tomáš. Any more questions? Yeah, Helena?
Yeah. Helena Horská from Raiffeisen Bank. I was ready to raise the same question, but maybe I still miss your personal opinion or even feeling, how you feel, what was the impact of weaker currency on the economy. I would ask the member of board. Thank you.
Okay, since you have came a little bit later, then actually I will say what I've said at the beginning. We are not here to express the personal opinions. Those are going to be expressed elsewhere. Here, the meeting is actually to discuss the bank board view as a whole, what was discussed and was agreed, but not to express the personal opinions.
Yeah, you will have a chance to read more about what was the flavor of the discussion in the minutes that are going to be published on Friday, as always. Any more questions, please? If there are no questions. If there are no questions, then let me thank you for participation, for the fruitful discussion, and we'll be very happy to have you here again in about 3 months. Thank you.